Jay, what is your highest conviction short call right now? Can you also talk a little bit about the current macro environment and how that impacts your calls? Kind of a loaded question, but.
Well, I think the macro environment for industrials, I think people are very, I think Keith, and one of the things I try and retweet him most on from the macro team is the need to separate your political views from what's going on in the actual economy. Because what you think about, Trump really doesn't matter, and that can be really hard to do. I remember during the financial crisis, that was very hard to separate whether or not you thought Fed policy was appropriate versus what it was going to do to the stock market.
Yeah.
It's like the great David Tepper CNBC quote, right? And I think you are in a much more modest situation now where, data look pretty good, right? So you're not looking, you're coming out of an industrial recession, and if you're expecting general industrial weakness to work on your short side, that's probably not going to work, right? So we want to keep it tight. We want to focus very specifically on industries that are, uniquely and idiosyncratically impaired, right, on the short side. So, a few of our shorts, we took MSC Industrial off a couple weeks ago. Over time, I think that industry is in trouble, and just because it's just like a B2B retailer, right? So it's going to face many of the same. And it's not just Amazon supply. There's a lot of other things going on there, like basically a co-op of independents that are trying to survive, that are much bigger. There's a reason that industry is fragmented after 100 years. But that's a place we'd love to get back to if people get excited about it again in the industrial recession. We have Deere as a short. I threw some of the data in there. I think there was a very significant rally in Brazil corn prices that has since gone away. Mm-hmm. So, that recovery is a big driver of why the last couple of quarters have been better, right? So we've seen very rapid growth in unit sales in South America, or ex-US and Canada, as Deere discloses it. And a lot of investors are saying there's a trough in US ag equipment. It's like, well, insofar as it's going down, I guess that's a trough. Like, I don't know we put out our note, it's called troughiness. It's like the character of being a trough without actually being a trough, right? Yeah. I think that's, there's also like an expectation that there's cost cuts there. There are other reasons why margins have stabilized, and cost we don't think is one of them, right? So I think Deere is a really interesting name to dig into, particularly on the finance side, which is a big chunk of the balance sheet and a big chunk of profit, unlike CAT, where it's a small part of profit. So those would be a couple of examples that stick out.